thank you very much for talking to Bloomberg Television.
Thank you.
We've seen some worrying international developments in the past weeks in regions including Japan, for example, North Africa right now, the Middle East. How do these events affect the FOMC's decision-making in the past weeks?
Central bankers should look at the very long term. We're a stabilizing force if we do our job correctly in the economy. These are dramatic circumstances, a terrible tragedy that occurred in Japan, still assessing what the impact will be, but most likely, particularly given the industriousness of the Japanese people, there may be some price and supply chain effects short term. The wars and civil wars or whatever they are in North Africa may be a little bit different, but I don't believe that they will have long-term impact on the nature of monetary policy, and we need to keep our eye on what's going on over the long term to do our job.
But you could argue that these events are increasing uncertainty for the recovery of the global economy, so it might have an impact on the timing of any measures central banks might be taking.
We have what I believe is a self-sustaining recovery in the United States. These can, of course, pinch a nerve, or they can give you a bit of a shiver. I don't think they're going to derail what's happening in terms of the economic growth occurring in the United States or here in Europe. They may slow it down for a short period. Time will tell. They might have other impacts, say, on the prices of certain commodities. But I think these are not likely to have long-lasting impacts.
Okay. You said that the Fed is getting closer to the point where accommodation will be stopped.
In my opinion.
That's your personal opinion. What factors are you looking at in particular when you're when determining the appropriate moment, basically, to begin tightening?
Well, let's not use the term tightening. Let's use the term normalization. But even before you get to that, you have to decide when you're no longer going to provide accommodative monetary policy. I believe that the Fed has provided a bridge loan to economic growth, and that the economy now is sustainable with private sector forces, assuming that the fiscal authorities, those that tax and spend our money, get their act together. But I think the Fed has done its job. We re-liquefied the economy. We had no liquidity during the crisis. There's sufficient, if not slightly too much liquidity, but there is certainly enough liquidity for businesses to use now, either financing their expansion or borrowing to finance their expansion. They have the wherewithal now to grow and to hire back American workers, which is what we would all like to see. So I think the Fed's job is done, in my opinion.
Okay, but there's always the problem of time lags, I suppose. The question is, what is your personal view of for example, a decline in unemployment? Can you wait until unemployment actually comes down? Can you afford to wait until inflation picks up?
There's a famous hockey player named Wayne Gretzky, one of the greatest National Hockey League players of all time. He said, you need to skate ahead of the puck. You have to be there and know where it's going to go. We never know with perfect precision where things are going to go. But because of the lead times and because of the analytical work that we do at the Federal Reserve, whether it's the Federal Reserve Bank of Dallas, the entire system, we need to anticipate what's likely to occur. And what we do know is that the pace of economic growth is picking up. It is becoming self-sustaining. And we have to start anticipating the fact that this will create different kinds of scenarios than what we had before. This much I can tell you. I personally do not believe that any further monetary accommodation, be it an additional tranche of Treasury buying or even sort of tapering off over a longer period what we said we would do and end in June, is necessary. Again, I think we've done our job. That's my opinion.
Okay. I know I should probably put this question to your colleagues at the FOMC, but how much support do you have at the FOMC for your view that there is no need for additional accommodation?
Well, I never speak for my other colleagues, but again, I think we look through many of the same analytical lenses, and I think the Fed deserves some credit here. I can give it all to my colleagues and not to me, but I think as a group, the FOMC deserves some credit for having done the right thing to re-liquefy the economy. And I think you can assume that most of the members of the FOMC feel that they've done a good part of their job. They've done it well. And now it's time for other people to pick up the pieces here. But we'll see, and you'll see as the next few meetings ensue.
The Fed is showing no signs that it will tighten or, as you said, normalize its policy anytime soon. At the same time, it's offering assurances that it will act in time to prevent inflation from accelerating. How can the Fed respond to growing inflationary pressures without throwing the markets off course?
Well, the markets tend to discount things beyond what anybody can imagine. Markets are powerful mechanisms. We do communicate, I think, quite clearly. We issued a statement after the last meeting. We discussed general inflationary pressures. We made it clear that we are alert and, to use a European term, vigilant, if not extremely vigilant, about inflation. And we have it on our watch, and it's a matter of confidence. So one thing that was clear, we announced we were going to do a program. I was against the program of the $600 billion in purchases of treasuries. I did not have the vote then. I would have voted against it, but the majority wanted it. And I believe once the central bank says it's going to do something, it should keep its word. The word that we gave was that the program would end in June. And personally, that's what I expect to happen. And the markets have, in my opinion, adequately discounted that.
The Fed has announced that its payments to the U.S. Treasury rose to almost $80 billion last year on income from mortgage securities purchased to spur economic growth. What's your reaction to this?
Well, we're one government entity that A, does what it says it will do. That's unusual. B, closes a thing down when it's done and performed its function. And C, very unusually, actually makes money and pays down the debt. So I hope we get a little bit of credit. The previous year we paid over $40 billion back to the taxpayer, and this year we'll pay closer to $90 billion back to the taxpayer. My reaction to that is that the programs that we put together, which some people thought would lose money, that would not work, A, worked, B, actually made money for the U.S. taxpayer. I think that's a good thing.
Last question. The Federal Reserve will be disclosing details of emergency loans it made to banks in 2008 after a U.S. Supreme Court ruling earlier this week. In your view, is the disclosure of the banks that borrowed a positive step or something that would be detrimental to financial institutions?
I really don't want to comment on that. We've been given an order. We will comply with that order.
Thank you very much.
Thank you. My pleasure.